Alrighty, hey traders. Now today in today's video, I want to share something. I want to share three things with you today of why I believe we're getting ready for some serious corrections in these markets across all markets. Gold, silver. Now when I say about to, I must put a caveat on that. I'm saying within the next, say, 2-3 months, we're likely to be starting that correction. No one knows when it's going to come, but smart investors, what they do, they see what's coming and they prepare for that. So when it does happen, you're not shocked about it, right? And so I want to share, obviously, a few things. I want to share this with you here, this job openings here, S&P. I want to share with you the rate cuts, but also I want to share with you a bit more about the actual chart itself. I want to share one technique with you that not only going to help you what's happening on the big picture right now, but also you can start to apply this to your own trading to start to look for some really good opportunities in the markets, but then also warning signs. And then I want to wrap it up with why what's coming next year is actually going to be quite amazing for that there. So traders, if you do need some help with your own trading right now, then this is what I want you to do right now. I want you to go to this page. There should be a link in the description, and I am running a webinar today. Here it is, all the details here. I'm going to be talking to you about, I'm going to show you exactly how I trade only 1 hour per day using a simple 4-step trading strategy with only one moving average. And the reason why is because I'm going to show you how to eliminate confusion and complexity in your own trading. And I'm going to show you exactly the exact trading system I use without using all these indicators and everything through there. So that first thing in the description there, guys, come and join me for that training that I'm putting on today for you. So let's start off with the big macro picture here for a minute, okay? And the purpose of this video here is to get you ready for what's coming, okay? Because smart investors, they set themselves up for what's coming, then they can get ready for it. The amateur traders, who generally are part of the bottom 95% there, those types of traders, or the 95% traders, they're trading based off emotion, and generally speaking, they're looking for short-term moves. So by looking at these videos, by looking at these pages, this market here, the first thing I want to share with you is let's go with job openings then, right? And then I'll get to this level here. So you can see, look at this here. So generally speaking, the job openings, as you can see, has been quite aligned with the market, right? Job openings start to go down, market go down, right? Job openings start to come up, and then as you can see, so the job openings start to come up through here, and then the market goes up, job openings. But look at this here, something's right. Now, what we don't want to do is we don't want to say this time is different, okay? Because you can't. What I'm all about as a coach for myself. What I'm also about a coach, but first and foremost, I'm a trader. So I don't want to use. I don't want to use something that is just reliant on this moment right now in time. I want to be able to utilize systems and processes that I can use forever. Make sense? See the differences there? So if people are like, well, John, I'm getting into this market because this time is different. You see how you're not setting yourself up for success. It's a big issue there. So that's the first one that I wanted to share with you there. But then also, as you probably know, is that it's a really interesting dynamic there. Let's go to, let me bring up this guy right here for you. And so what I'm looking at here is, there's my daughter. Let's go back over here. Love her so much. Oh, there's my kids when they were younger. Where did that screenshot go? There we go. All right. There you saw my daughter and my kids. I love my kids so much. Bit of FYI, guys. For you guys that are family men, just make sure you try to keep that impact, right? Like, yes, schedule time for block time for market study, analyst, doing your trading, stuff like that. But I'm telling you right now that when you get older, the worst thing to happen to you, and I've got 3 kids of my own, they're all getting older right now. The worst thing to happen to you is you make a lot of money from trading, yet your kids don't even want to talk to you. The kids don't even say I love you. Like my older son, Curtis, he went out all day yesterday with his friends. He's 17 years of age. And he's talking to me and messaging me. He's like, I love you, Dad. And, all this sort of stuff. So I want you to be really, and that's when it comes to my coaching program, guys. Like initially, when it comes to my coaching program, that's that second link in the description there. You can actually see there's an application form. You can see all the testimonials there of people that actually done my coaching. And you can even see my last year's real equity curve if you think I'm full of crap. But before I get into these markets here, I've just triggered a thought here. Before I get into this here, I want you to understand that success without fulfillment is the ultimate failure, right? And so for me, from over my last 20 years of trading, my first 10 years, I screwed up big time because I was trying to get ahead in the markets, right? And that's what you do. When you try to get ahead in the markets, the whole life is consumed by the markets. And while it's important to be obsessed, you need to be obsessed. It's so important to not forget your loved ones. Now, I know there's going to be periods of time that you might spend a week or two going really deep into something, right? Maybe even for a month, but don't make it years. I did the mistake when I first started getting over the markets, and this led me to not having a relationship with my kids for a while, getting a divorce, because I just didn't understand that. And I understand, right? And again, that's the reason why I have a coaching program, because I take what was taking me 20 years to figure out, and I put it down into a 6 to 12 month coaching process where you're with me every single day. And the whole thing about this is that this is where I want to teach you the systems, the processes, the thought strategies, the mindset strategies to only trade maybe an hour per day, do really well. Make sense? If you're interested in that, that's that second link in the description there. But anyway, that just triggered a thought there. I know that's going to help at least some of you fathers out there, because that's what we do it for, right? You can make $10 million from these markets, but how do you feel when your kids don't even want to talk to you? Pretty bad, right? Pretty bad. So that's a bit of a story there. And for you fathers, you know exactly what I'm talking about there. So back to this screenshot here that I found on the good old interwebs. You can see here, right? So generally speaking, it's actually a bit of a counterintuitive thing, right? So you can see when the rates are going up, stock market's going up. Rates going up, stock market going up. S&P 500, rates going up, stock market went up. And it's a bit of a thing, right, in the markets here. Because meaning, like, if you see what's going on with the markets, you start to notice what? You start to notice that one of the things that I've always meant to believe, that if they start to raise rates, that's going to put pressure on asset prices and we're going to go down, right? That's what we firm to believe. One thing I've found though is that when the market starts to go up, that's when things start to tighten up. But it's a lagging effect. And as you can see from this screenshot here, it's not until we've actually started to, it's all the same story, right guys? It's all the exact same story. And what I mean by the same story is this. Let me bring on a bit of a yellow for you guys here today. Happy weekend to everyone as well too, guys. I hope, I just want to say that I appreciate every single one of you. I appreciate you guys watching my videos. And my goal is to just help some of you guys get ahead in the markets and try to give you the proper strategies that's taken me 20 years to figure out. And hopefully some of this stuff that I'm looking at myself, because again, I'm a trader first and foremost. My number one thing is to do really well from trading. And that's the reason why my coaching program is so successful, by the way, because I'm a really good trader, and then I'm teaching them exactly what I'm doing to do really well. So look at this here, right? It's not, market goes up, we flatten out for a while, we drop. And then we have the drop here back in 2002. Goes up, we flatten out, we start to drop, recession. Market goes up, flat, drop. And now that's obviously COVID, right? But look what's happened now. You see how it's all the same pattern, right? So it's not about like if the market's going to have a big correction. Now this is looking at some of the fundamental stuff here, right? So we're looking at some of the fundamental stuff here of the big picture. Because what we don't want to be thinking about is like, but Tom Lee said there's 7 trillion on the sidelines and we're probably likely to continue going up. Please don't listen to that. Tom Lee may be right, but you know there's a lot of things in the markets, right? We just need to be smart here. No one knows what's going to happen. But if you look at the patterns in the market, you will see what actually happens here, right? You see that we go through these phases. And what happens? We go up, we pause, and then we go through a cutting cycle. Now, I don't know if it's going to go down to 0. I don't believe so. But look where we are now. Look what's going to happen here, right? And then this is the bulk of it. So there's a lot of pressure on the downside here, And as this market's been rising through here, we've just started really, it's all just the last sort of couple months been starting going through a cutting phase. So the first thing here I want to sort of bring you through here is, look at this. We are going through a phase right now where there's extraordinary exuberance. The market's gone massive V bottom. Okay, we went from the sky is falling just a few months ago with the tariff to now like, but John, you don't understand, this time's different. There's 7 trillion on the sidelines. Do you see how the story's always different? You know what I mean? And this is where you just question your thoughts, right? A lot of our thoughts are wrong around these markets. So we could see that through there. Now, one of the things that I really want to sort of bring, now that's the fundamental there. One of the things I want to sort of bring your attention to is what I'm always looking at a thing called price and time, which simply just means, and to put it in a simple context, if I bring up this is just a simple, right? If I bring up this is a simple arithmetic chart, okay? It's a monthly chart, and I've just got a 52 moving average. Why a 52 moving average? The number is irrelevant. It could be a 50, could be 60. I personally like to use the 52 moving average on my daily charts, when I'm looking for signals. So I just kept it on there, and it's the idea around what I'm teaching you here. Now check this out. As you know, the market goes through waves, right? We go through particular waves, meaning we'll go for a wave up and we wave down and wave up. Now, one thing that I've always tried to sort of ask myself is like, how do I know when we're getting very close towards this end of the wave before we start to see a correction? Because as you can see, that's all markets do, right? We go ba-boom, 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 ba-boom. See what I'm saying there? So I was always asking myself, how do I actually get to the point where we're getting towards the end of this movie? And as you can see, there's a very simple thing that I like to do that, one, gives me a warning sign that don't be getting involved in this thing right now, because there's a low probability we're going to continue up, and there's a high probability we're going to see a reversal. And just get a good understanding of what's going on. So, and what I mean by that is this. Check this out. Notice that, and again, guys, please don't add but and then story. Just look at what these markets do, okay? Just keep it simple. Don't overcomplicate it. Whenever the market gets too far away from the moving average, what ends up happening? But John, this time's different. No, stop. Even look at this here. Even look what happened back in the absolute massive bull move, the tech boom of all booms. Now again, this doesn't tell you when the exact top's going to be. And this is a monthly chart. This is looking at the big picture. The reason I'm showing you here is if you think this is going to now just keep going up and up and up, we can. But just understanding we're getting towards the end of the move. Why? Because now, look how far we're up right now. And you can see through history, and this is where some people say, John, but there's 7 trillion on the sidelines, it's got to go somewhere. Well, if that's the case, why did we get the 2023 drop? What happened this year? What, the 7 trillion just disappeared? What, did it go start to add now? You see what I'm saying here? Like, but the thing is, I'm teaching you something here right now that you can use next year and the year after and the year after and the year after to help you get a good understanding of what's going on in the markets right now. But also help you understand that, we're getting too far away from the moving average. When that happens, we're getting too extended, we're getting too greedy, we're getting too, it's probably going to get a bit of a pullback. And you can see, that's all happens through there, right? Even the Dow Jones. You notice that, again, just a simple chart. And this is where, like, again, for my trading guys, that that webinar on the link below, that's the reason why, like, you'll see that I only use one moving average. This is the one moving average. And just by understanding this simple, we can really simplify our process. All this, most of the stuff out there that you learn is a total waste of time. But look at this here. We go up for a while, we come back to the moving average. We go up for a while, we go up, we come down, we go up, we come down, we go up. We may continue up a little bit more, but eventually what's going to happen? We're going to come back to the moving average. We're going to start to kiss the moving average again. See that through there? So again, this is not to say this week, and I'm pretty sure most of you smart traders that have been around for a while, this is just an awesome tool to tell you, oh man, okay, Okay. I can see what's going on here. I don't know. It might not be now, but man, oh man. Yes, we can continue up even more because this is a monthly chart. Doesn't mean we can't have a big up day tomorrow when the market opens up, or a big up week this week, or for the next few weeks, because this is a big long-term monthly chart. It might take a few months for it to start to filter through the process, and then we start to get the pullback and so on and so forth. But I'm trying to show you a simple technique you can use with your looking at the markets there, right? And we look at this over through here. Here is the, not much going on the Russell. All right, no, again, just a simple monthly chart. S&P 500. See how it's all the same thing, right? So all through history, the market is going to give you these things called repetitive patterns. Okay, one repetitive pattern was what? You know that through the last 50 years or so, whenever we go through a cut, the recession doesn't happen when the rates are going up. Recession happens when the rates are going down. We just saw the facts of the chart, right? Not me. I'm just showing you his facts. What you don't want to say is, but this time that's dangerous for words. Okay? This time is not different. And what I'm trying to share with you here is something that you can utilize now for the rest of your life. And what this is, it just tells you, okay, the market works like this, and it's repetitive. We can see when we get too far away from the moving average, we start to get some warning bells on about what's going on from there. Make sense? And we can see that through there. Now this is where it gets really cool. So this is what's happening here. If I let's bring on SLV here for a minute. Right, this is SLV. That was the move there, right? So if I can look at the maximum distance away, we can see where we are right here, right? So yeah, we may have a little bit more upside to move, right? Some people think, you probably see me recently got out of my trades just recently. Some people think I'm calling an exact top in silver. Like, I don't know when the top's going to be in. I do know for my trade, because I was in options, I'm taking my money and running. Thank you very much for your homemade Bicky. All right, so we can see here that once again, when we start to get these from there to there, right, you can see we're starting to get these maximum distance away from the moving average. And again, this is a monthly chart, guys, right? So this is what I'm trying to share with you is the big picture, right? Because that's what this whole video is about, the big picture. Big picture is the fundamental analysis, as we can see. Some of the fundamental analysis we can see. Jobs report, okay, here, there. Rate, oh, we can really start to dive deep down into that one, right? Very nice. Then this overall big long-term monthly charts to give us, okay, what's really going on here? Is this just set up here to make a supersonic boom? Or maybe not. Once again, guys, I want you to be able to use this for the rest of your life. And right now, where we are on there. But you want to know something here? And I'm telling you right now, this is going to make you guys who love the good old gold make an absolute mind. Look at this here, guys. Okay. This is interesting, right? Interesting. Actually, you know what? Let's do this here. Let me bring on, because I think my trading view, this is my TC2000. This is the software that I use because I run my scans. I have scans that I give my coaching clients to help me find my setups or help us with the trades. But let's go back to here for a minute. Let's go to gold. And what I want to do here on this video is I want to share something with you, because what I want to do is on this monthly chart, I only can go back a certain amount of, like only to 05, but I'm pretty sure on my trading view, I can go back to a lot more time. Okay, so let's actually bring this up. Okay, yep, cool. All right. You know, one of the things, guys, that I learned about trading, and I'm laughing because I'm like looking back, like here's some of the biggest bubbles we've seen in gold, and like look at this here and look at this here. We're in one of the biggest bubbles we've seen in history. I'll tell you right now, millions of traders are going to be wiped out. These three major things I'm sharing with you, the two fundamental analysis, or even two major things. Oh my goodness, people that don't see this because they're not seeing the forest from the trees, and I get it, right? I've been trading the market for 20 years, and my first 10 years, I wasn't looking monthly chart. Who gives a shit about the monthly chart? I'm not going to make money tomorrow. Like, that was my thinking, and I was always wrong there, right? So the first thing is what we saw there. But look at this here. If I bring this up to here, right? We see this point through here, we see this point through here. Firstly, what you want to see is every time we go vertical in any market, I don't care what it is, inevitably what comes? Inevitably what comes? We go through corrections, we go through pullbacks, we go through, that comes. That is going to happen. Now we don't know when. Now, some of you gold bugs who just want to marry gold, who cares about marrying gold, guys? You want to make money, right? Who cares? Well, I do understand, right? Because people on the gold bug train right now, because of that there. But again, for you guys that actually just want to see your digits go up, that's what this is about. But look at this here. Isn't this pretty cool? Right? So if I do some drawing from the distance here, you can see that was the maximum distance away from the moving average. Right, from there to there. You can see there to there. Now, it's a rough guide, right? It's never like, oh, this is the exact height. But it gives you a good guide. There's it there. Look at that there. That was actually pretty much spot on, right? Again, rough guide. Look where we are right now. It's like, okay, this here, if I'm looking at the maximum high point before I got there to there, again, this just gives you, again, guys, we never know exactly where the top's going to be in, right? That's not what this is all about. It's not to say this month the top's going to be in. It's just to say that generally speaking, when the market does get too far away from the moving average, we've done too much price, too much movement, and the market's probably going to start to get a little bit tired. They need a little bit of a rest, right? And then we go to this one here, and that's that one there. Right, we can even go back to this one here, which wasn't as much. So this one here looks like it was, yeah, when we're looking at the angle, look at that there. So that was the maximum distance away there. I'm just trying to look. Oh my goodness. I'm just laughing because it's so obvious when you start to look at things like this. Like, it's so obvious what's coming, right? First thing is that every time in history, and this is where again, please don't insert story or but John or this is the end of the road, this time is different. Those words will destroy you. And once again, those words won't even help you next year. What are you going to do next year when you're looking at a trade then? Or 3 months from now when you're looking at a trade? You're going to come up with another story, another approach? No wonder you're not making money right now. See what I'm saying here? We can't trade consistently long term for 10 years, 20 years. For this time it's different. But yes, you are right. This time is different. It's very different. And as you can see, once again, guys, and this is just, look at this here. Vertical move. Every single vertical move we've seen in markets always comes with what? A correction, a pullback, a sideways phase. Maybe even something like this here. But FYI, as you'll notice, every single major correction, when it does start to correct, where do we correct to? That was the first little bump through there. We got down to the 50% level. This was look at here, massive move to the upside. We got down to the 50 to 60% level. Next one to the here. Right, nice big blow off move. Right, it's all the same thing, isn't it, guys? There we go from low to high, 50% level. Next sort of strong move was from there to there, as you can see. Right. Again, this is looking at long-term monthly charts, as you can see. Nothing special. Going back down to there. Right, that was that low, that was that major low to there. Could even do this low here. You can see it comes down 50% correction. So when this market does end, and again, it doesn't mean we're going to stop here right now. We can have another month to the upside. But you do know we're getting towards the end of that, maybe last 10, 20% of the move before we start to see another one of these guys. Right? And it's so obvious, right? Like, look what gold does. So if we do peak out here, well, let's just say we did go to 4,000. That can happen. We know that, right? Okay, let's say we did go to 4,000. Well, therefore, a correction would be right down here. But you know what? What I'm talking about here, and what I mentioned at the start of the video was three things. Firstly, I wanted to share with you what's likely to come right now and why there's a lot of danger in the market. And then secondly, I wanted to teach you chart pattern that not only can you see what's happening right now, but you can use this on all markets. And I like to use this on a daily chart as well. What do I mean by that? Whenever I'm looking for a trade, if the market's too far away from the moving average, either up or down, I don't like to trade there. I like to trade when the markets come back close to the moving average. Now that's one of my rules you'll be able to learn on my training there. But here's where it gets really good. Now I've walked you through what's likely to come over the next, say, 12 months. Okay, from now through the end of next year, and this is where I truly believe 2026 is going to be a very, very, very rocky year. 2026 is going to wipe out millions, and these patterns here are what's causing the market there, or what's causing that. Now here's the thing. Now I've walked you through that. What does this mean on a massive long-term picture though for everything? Okay, yes, we're getting towards the end of the move. It may be another few weeks to another few months before we actually start to really get to that top. Okay, we do know that's coming. But then, what does this really mean for the big picture? And if we look at the big picture, this is the monthly chart. If we do get, say, a 50% correction, if you look at the G or D price, now we're looking at this is our logarithmic chart now. Right? A logarithmic chart. What do we see through here? Okay? What do we see through here? We see that when the market does pull back, if the market does, when the market, just say we had a little bit more upside. Let's say we had this here. Okay? This is a GLD monthly chart logarithm. And as you can see, even through here, big bull market, eventually pull back, big bull market. Okay? We're going to go through another one of these, another one of these. It's coming, right? It's baked in the cake. No, the market's not just going to keep doing this and this and this and this. No. But we can see that through there. But let's just say we do get the big drop, okay? A nice little move up and we start to get the drop. And we get that 50% little drop from there. What does that simply mean? Low to high, it's probably around that area through there somewhere. Right? So what may happen is we go from there to there, roughly anyway. We're probably going to see something like that. Maybe even come back down towards this trend line. So all of 2026 into 2027, maybe even through 2028. It might take a couple of years, maybe even through 2028. And then we see something like that. So that's why, this is not a bad thing for you guys that are looking for some amazing buying opportunities. Next year's going to be your year. Next year's going to be your year, right? For you guys that have, and the same thing for me, right? I'm looking to deploy some really good capital. There's some sectors out there, like the energy sector, that I'm focusing on myself, okay? But this is where it's getting amazing there. But we are getting very, very frothy, okay? Everyone's very bullish, especially the gold and silver market, right? Gold, silver, mining stocks. But with that being said, that's what I see there with gold, right? If I go to the SLV, same thing with the SLV. I'm not calling for an ultimate, massive, complete crash, but really, there's going to be probably some serious movement on the downside. So the SLV does have some more upside here, and then we do get a real good pullback, which is going to come. No, the market's not just going to keep going up. That's not how markets work. You know. Okay. Okay. So we have that through there. What we want to see also is the stock market. So if we start to look at things like the Dow Jones, look at the Dow Jones. We could even overlay the moving average. Now, firstly, look at this big, massive cycle we're on. See this here? You do know we've got 5 years to go, right? You do know we're actually now in the start of an AI boom. Now, what I said there is an AI boom. In a boom, we still get corrections, okay? So what's likely to happen on the Dow Jones? Just like all, we might get a little more upside, and then we're going to get a correction next year. S&P 500. Look what's happening here, right? I have an ultimate target up there. So we do continue up for a little bit longer from here, right? And we do get something like that. You know what that is? That's a 30% correction. on the S&P. What about the Nasdaq? Right, that's the on there. Let's use that's the composite. Let's go to let's just use that's the composite, and this is the not there. What do you notice? We're actually in a very big bull market. So even though we may get more upside and we do get a drop through there, you know what that through there is? That's a 30 to 40% drop out of the Nasdaq. What's going to happen there? Well, right now we're going to go. The market's going to keep going up, right? Then we're going to see the market's going to go through the fall. So we can see that through there, and we can see what's happening through here. And all that simply means, remember, we're in the middle of an AI boom. This is not a complete, demolish, and we're going to go back down to these levels here. No. We get a drop, yes. We might even get like a little short-term flush out below level, back up again, and then we're going to see a ricochet, ravishing boom. Why? Because we're in the middle at this, really probably the early stages of an AI boom. And the next shakeout, that's going to happen across all markets, even the Russell, right? Look at the Russell. The Russell is really shaping up to be like that's actually just a bit of target there. But if I take it off, look at the Russell. Look at the Russell's been doing nothing through all this time, and now we're starting to break out. So again, this is a monthly chart here, right, guys? Monthly charts. So it's just an overall basis, right? So we can see here overall, yeah, we may get a little bit of a pullback here, but overall, the Russell is probably likely to continue up from here and start to see some really nice move from there. So as you can see, what I talked about here initially was there is screaming signs, both from just an understanding cycle perspective with the rates, okay? Rate increases, no market doesn't go down, right? But when the rates decrease, and they start to decrease even more, in the cutting cycle, like we're in right now, that's when we're getting very close towards a recession, if not already in one. Okay? Then the next thing I walked you through was basically how by looking at just a simple chart and bringing on any market, call it the S&P, and you squeeze your charts up like this level here, just a simple standard monthly chart with a 52, you can see there's a repetitive pattern. Again, this is to help you even with the trading and even when you're investing, right? When were the best times to invest? Hindsight's 2020, right? It was here, it was there, it was there, it was the tariff. When's the next time? When's the next best time to invest? If you do believe in the AI boom and you do believe in all this sort of stuff, even for the gold market, right? Even for the gold market, if you do believe that, and let's go back down the GLD here, right? And you do believe that. Well, when's the best time to trade? Right, or even looking for an investing, like a really good buy for a while, in the markets there, right? All markets. Look at this here, Nasdaq. Best time was where? You see what I'm saying here? Is wait for at least a bit of a correction to near the moving average, and you buy on the dip, right? What a lot of traders do, and I learned this from Howard Marks, successful investor. 70 years, I think it's now 70 years in the markets, 50 years in the markets, okay? Most people want to buy high and sell low. And as you can see, this is the psychology of markets, right? So as you can see, for you guys that are sitting on, quite a substantial amount of money, and we're talking millions of dollars, and you're looking to deploy some of this money, even if it's not that, but you're looking to deploy some of this money to ride the next wave, which is, I do believe, is going to be a supersonic boom, by the way, from 2028 through to the early 2030s. That's the gold, everything we've walked through today. Then you know what to look for. You know how to position yourself throughout the next 5 years so you're not running around frantic. And this is the whole thing about this video here. And I want to finish off with this video here. I'm always teaching my coaching clients. Again, if you like this sort of stuff, guys, click on that second link in the description. There's more details over there about my coaching program and people have done it and the application. And let's have a chat on the phone. I'll be happy to see if I can help you out. But the whole thing about this is what? This is just about to see what's likely to come. And so therefore, when it does happen, we're staying calm, because that's what we want to stay calm, right? We do know whenever we start to get emotional, fear, greed, all that sort of stuff, ego, stuff like that, guess what ends up happening? We make bad decisions, don't we? So all I'm doing right now, and this is for me first and foremost, and then I'm showing you what I'm seeing. So how do I make sure I can add not just an extra zero on my trading account in the next 5+ years, but looking at these massive cycles at play, but potentially adding an extra 2 or 3 more zeros. So by the time the early 2030s come, I could potentially generate a lot of money by both things. One, positioning myself to ride the multiple years of bull markets coming on the other side of the recession. And we do know there's one that's coming, right? But then also, I'm also then looking for opportunities for trading opportunities as well too. And so both then go hand in hand for me when it comes to that sort of stuff. So anyway, traders, I hope that helped you out. Once again, traders, just a last little reminder for you guys. If you did enjoy this stuff here, guys, then make sure you go out, make that first link in the description there is this page here. And it is a link to a webinar that I'm running right now, where you can go check it out right now. If you need some help, then go get that. I promise you, what you're going to learn in this webinar is literally going to save you 20 years of just heartache of trial and error in the markets from there. Or if you're looking for more like hand holding, I have a 1% group that you can apply for. The 1% group is amazing. We trade for an hour per day in there. I'm coaching you, I'm helping you. And the good thing about it is that I show you how to really set a good trading style to fit your overall lifestyle. I'm not an active trader in there. I'm a swing trader. I like to get in and hold for big profits. But then also you become part of a family community as well too, right? It's a very small group. It's only around 15 people right now. And if you're looking to join and be a bit more like community based, where you're around like-minded people, and we call it the top 1% because what we achieve in that group is what 1% are achieving right now in the world, right? Especially when it comes to the trading of the markets there. 95% of traders don't make money, and so on and so forth, right? It's only 1% that actually do really well, and that's what we do through there. So if you're looking to only trade, say, half an hour per day, and that's when you want to learn the skills and process from there, you've got to learn how to do a bit more swing trading where you're jumping in on big moves, not lots of trades. And if you really want to be part of like a community of really like-minded people to have a surroundings to help you continue your trading journey, because most people won't, then you may be a good fit for the 1% group. That's second in the description there, guys. Click on that, and you and I will have a pretty good chat on the phone, and I'll see if I can help you out moving forward. Speak to you soon, guys.